You know the feeling. That brown envelope from HMRC lands on your doormat. Your heart just stops for a second, right? What is this? Did I do something wrong? Well, that feeling of uncertainty is exactly what we're going to tackle today. Because inside that envelope, there might just be something called a nudge letter. Understanding what it is, and more importantly, what to do next, is the key to turning that spike of anxiety into confident, clear-headed action. And that's why the experts at ProTax Accountant have put this guide together. We're here to demystify these letters and give you a solid plan to navigate this with total confidence. So let's get right into it. So here's what we're going to cover. We'll look at what a nudge letter actually is, why on earth you might get one, your step-by-step response plan, the very high cost of ignoring it, and finally, how you can stay compliant and, protected. All right, first things first, what exactly is a nudge? Understanding HMRC's strategy here is really the first step to taking back control of the situation. Okay, at its core, a nudge letter is not a formal tax investigation. Let me say that again. It is not a formal investigation. Think of it more like an informal, targeted prompt, kind of like a tap on the shoulder. HMRC has data that suggests there might be a mistake in your tax filings, and they're encouraging you or nudging you to double-check everything yourself and voluntarily fix any errors. What's really fascinating is how this whole strategy came about. It's not a brand new idea. HMRC started dabbling in behavioral science way back in the 2010s. But the real game changer? That was the Common Reporting Standard, or CRS. This is basically a global agreement where over 100 countries automatically share financial data with each other. It means HMRC now knows about bank accounts you might hold from Spain to Singapore. And that supercharged their ability to spot undeclared income and sent the number of these letters through the roof. And the scale of this is it's staggering. In the 2024 tax year alone, it's estimated that 1.2 million of these letters were sent out. So this isn't some rare event. It's a massive, systematic campaign that's hitting a huge number of ordinary taxpayers, freelancers, and small business owners all across the UK. And you can see exactly why they do it. These campaigns are incredibly effective. They helped recover over £1.1 billion in unpaid tax in 2024. The crucial thing to get here is that these letters are a cheap, highly successful tool for HMRC, and believe me, they are here to stay. So this brings us to the big question you're probably asking right now. Why me? Let's break down the most common triggers. And stay with me here, the next part might really surprise you, especially when you see just how much data HMRC actually has. The triggers are often tied to income sources that are surprisingly easy to overlook. That global CRS data makes undeclared offshore income the #1 culprit. But it's also stuff like unreported rental income. Maybe you're a homeowner in London renting a room out on Airbnb. Or maybe you're a freelancer who sold some stocks and completely forgot about capital gains tax. They're also heavily targeting crypto gains, looking at inheritance discrepancies, inconsistent income from the gig economy, and even incorrect claims for COVID support grants. This is such a perfect example of how easily an honest mistake can happen. Someone could be renting out a room on Airbnb, thinking of it as just a bit of extra cash on the side, and have no idea it's actually taxable property income. You see, these often aren't cases of people trying to cheat the system, but genuine misunderstandings of some pretty complex tax rules. But here's the thing. HMRC's data matching computers don't distinguish between intent and error. They just spot the mismatch. And here's a pro tip on how they know all this. HMRC uses this incredibly powerful supercomputer system called Connect. It cross-references information from over 30 different databases. We're talking about your bank records, land registry data, credit card transactions, data from letting agents, crypto exchanges, and even online marketplaces. Connect essentially builds a detailed financial profile of you and automatically flags when the income you declare doesn't line up with the digital footprint it has pieced together. Okay, so you've received the letter. Now what? This next part is all about turning that anxiety into clear, positive action. That's not all. Here's where most people go wrong. They either totally panic or they bury their head in the sand and ignore it. We're going to give you a solid plan instead. Here is your simple 4-step action plan. First, and this is the most critical part, don't panic, but absolutely do not ignore it. You need to acknowledge that letter within the typical 30-day window. Second, gather your records, your tax returns, bank statements, anything and everything relevant. Third, assess the situation. Carefully review your filings against your records. Was there an error? If you have any doubt at all, this is the moment to get professional advice. Finally, you drafted clear, honest, and professional response. Let's boil this down into some simple do's and don'ts. Do, respond promptly. Be totally honest and get professional advice if you're not 100% sure. And always, always keep copies of everything. The don'ts are just as important. Never ignore that deadline. Don't just guess or speculate in your response. Avoid rushing out an answer without a full review, and absolutely never, ever provide false information. That can escalate the situation from bad to worse really fast. Now, understanding the potential penalties really shows why your response is so crucial. For the 2025/26 tax year, penalties are based on your behavior. So a careless error, a genuine mistake, that you disclose after getting a letter carries a penalty of between 15% and 30% of the tax owed. But if HMRC thinks the error was deliberate and concealed, that penalty can shoot up to 100%. Responding to the nudge letter is your chance to show you're cooperating and stay in that much lower penalty bracket. So, we've talked about the penalties, but honestly, the cost of ignoring a nudge letter goes way beyond just the initial tax bill and interest. Let's look at the very real risks of doing nothing. The financial stakes are crystal clear. Acting on a nudge letter keeps you in what's called the prompted disclosure category, which has a lower range of penalties. But if you ignore it, and HMRC has to escalate to a formal investigation, the potential penalty levels jump significantly. Prompt action saves you money. It's as simple as that. And the risks aren't just financial. Ignoring the letter can trigger a full-blown tax investigation, which is far more intrusive, way more time-consuming, and incredibly stressful. This could mean deep dives into all of your finances, both personal and business, for multiple years. Then there's reputational damage to think about, and in the most severe cases of deliberate fraud, it could even lead to criminal prosecution. This is why taking these letters seriously is completely non-negotiable. Okay, enough of the scary stuff. Let's flip this around and focus on prevention and protection. How can you stay compliant and get that peace of mind so you're not dreading the postman every morning? The best strategy is always a proactive one. First, get an annual tax review with a professional who can spot potential issues long before HMRC does. Second, keep meticulous records for every single bit of income, no matter how small it seems. Third, be completely transparent about any offshore assets. With global data sharing, there's really nowhere to hide anymore. And finally, stay informed. Tax laws change, and unfortunately, I didn't know is not a valid defense. And here's a final, crucial point. Did you know that simply receiving a nudge letter can flag your account for future monitoring? That's right. Even if you respond and it turns out you are fully compliant and owed nothing, your risk profile with HMRC might have changed. This just reinforces how incredibly important it is to get things right the first time and keep those records clean year after year.
Look, if you've received one of these letters or if you're feeling at all uncertain after hearing all this, please don't try to handle it alone. For genuine peace of mind and an expert review of your entire tax situation, contact the team at Pro Tax Accountant. You can reach them on WhatsApp or by phone at 079856899912 or just send an email to info@protaxaccountant.co.uk. They are there to give you the clarity and support you need.
I really hope this guide has been helpful for you. For more clear, practical guides that can help you stay compliant and confident with your taxes, make sure you subscribe to the Pro Tax Accountant YouTube channel. Remember, when it comes to taxes, knowledge isn't just power, it's your best protection. Thanks so much for watching.